Good afternoon, everyone. My name is Scott Wurtzel. I am a senior associate on Darren Peller's Payments Processors and IT Services research team here at Wolfe Research. And we're happy to be joined by Vlad Lunigov, CEO of MBank, and Ahon Sarkar, General Manager of Helix by Q2, to discuss recent developments in the bank technology space with a focus on banking as a service. Can we maybe just start off with each of you giving your backgrounds and an overview of your companies? So maybe we'll start off with Vlad and then go to Ahon.
Thank you very much, and Ahon, nice to meet you. Vlad Lunigov, CEO, founder of MBank. My personal background is in banking and technology. Prior to founding MBank about 5 years ago, I advised banks and credit unions on how to increase profitability. So my journey took me to 3 out of the 4 big 4 firms. So I worked at KPMG, EY, and PwC. And I guess my focus was always on trying to help banks select best-in-breed innovators and also choose core banking systems. And so I found that there was a lot of innovation taking place on the periphery of the core. So let's say in payments and KYC and compliance, there was a lot of innovation, but really nobody touched the core. So myself and several of my teammates, both with background in consulting and technology, we thought that there must be another way. So we established MBank first as a technology provider. Then we moved into software as a service, gradually transitioned into BPO and compliance outsourcing provider, and then ultimately into banking as a service. That's it. So we bring licensed sponsors to and the entire whole ecosystem to our clients.
Perfect. Vlad, nice to meet you as well. We got a second to catch up right before this. For those of you I haven't met, my name is Ahon. I'm the general manager of Helix by Q2. Quick background on me. I was one of the earlier members in banking as a service back in 2015, 2016, as we created an offering with Q2 that today has become Helix. Prior to that, I worked for the CEO of a company called Bridgewater, which is a hedge fund out of Connecticut. And prior to that, I started a company of my own in the voice communication space. With Helix, as I mentioned, we're a part of Q2, which is one of the leading digital banking and lending providers out there in the US. We primarily partner with 500 plus banks and credit unions across the country to give them digital banking and lending solutions. And now with Helix, we're offering embedded finance to north of 12 million users by partnering with large fintech technology companies and brands like Credit Karma, Acorns, Betterment, all those types of companies, with the goal of trying to make finance a little bit more human, right? Build products around people, create a differentiation out there in the banking market, and ultimately serve the underserved and communities that have sort of been left to the side through banking services. So excited to chat with you guys today.
Great, thank you. And maybe Ahon, we starting off, we hear the term BaaS thrown out a lot, but maybe can you give the audience just a brief overview of what banking as a service really means from your perspectives, and go into maybe the innovations that Q2 and Helix have done in the space over the past few years?
Yeah, for sure. It's funny, when we started in the banking as a service space, people would think it was kind of crazy to launch bank products. Today, there are so many different flavors of banking as a service. It's almost difficult to understand what exactly it is. I think when you boil it down, banking as a service is exposing the building blocks of banking via API to allow companies to embed banking functionality inside of their businesses in partnership with banks, with credit unions, and other financial institutions. As I mentioned, we were one of the first in the space. We actually originally had the name Camber, but then became wholly owned by Q2 and really grew this over the last few years. And with Helix, the goal is to effectively become the framework to take the building blocks of finance and build unique products around people. Just as, in biology, a helix is the framework to take the building blocks of life and create all of us, right? So in the last few years, what we've done is, first, we focused on partnering with companies across different verticals, because what we've learned is when you can combine a traditional ecosystem, whether that be in a financial space like lending or insurance or payroll, or a non-financial space like retail or brands, when you can combine that with banking, you can sometimes create a whole that's greater than the sum of its parts. So if you look at our partnerships with the Credit Karmas or the Acorns or the Gustos or the Betterments of the world, what you'll see are materially different products that serve different kinds of customers. So the first piece is, how do you create the diversity of offerings that are now available in the space? The second is, with Helix, we asked the question of what is missing for people who are looking to offer these programs at scale. And what we learned was that the biggest thing that was missing was personalization. If you look at the technology companies that you use, so you think about Netflix, right? You think about Google, you think about Apple, all of those products conform what they show you based off of the context that they have about you. But if you think about traditional financial products, it's more of a one size fits all for consumers, where you walk into a bank and you get product A or you get product B. And the main thing that determines which one you get is how much money you have, right? So what we've done with our platform is really take every facet of the product, from your limits and controls to the interest that you earn, to the rewards that you can get, to the hooks that you're offered, and allow you to configure those at the user level. So these companies can take the context they have about you and build a product that's specific for you, so that you're more likely to engage, and so that in the long term, they're able to retain their customers because they've built that type of relationship. So those would be the two big kinds of innovation I think we focused on: creating differentiation in the space and trying to make the platform itself personalized, so we can change the way that financial products work for the average consumer.
Great, great. I mean, that's super interesting. And maybe sort of building off of that overview, can both of you potentially share your thoughts on sort of the state of the market in banking digitization, sort of looking at what % of banks today have a strong BaaS or digital offering and touch sort of an on-demand service? And Vlad, why don't you go first, and then we'll go to Ahon.
Yeah, sure. So I guess BaaS generally has grown dramatically in banks in just a few years. So just like what Ahon was saying, even a few years ago, it didn't exist in the same form. And now you get things like BNPL, buy now, pay later. Now you've got crypto, you've got all the different use cases that suddenly exist that didn't exist in the past. So MBank's perspective, I guess, is slightly different. We operate in what I call the long tail of banks, credit unions, and fintechs. So the reason why it's different is because most of them really want to deliver digital services, but they cannot, right? So some of our credit unions can't even afford to have a compliance team. So that's why we would start with compliance as a service. We start with dispute resolution as a service, lending as a service, virtual branch as a service. So basically all of the services that wrap around the technology is what we would call banking as a service, I guess, in our world. Now, talking about incumbent institutions, oftentimes you find that migration is a key. It's so hard to migrate. And to be honest, for most of them, just even thinking about migration or digitization that requires migration, for example, is considered as an open heart surgery. So really, the best way forward for the long tail of banks and credit unions and fintechs that we work with really is banking as a service.
Yeah, I think Vlad's spot on when he's talking about the fact that almost all of these banks want to enter the opportunity in some way, but are not necessarily staffed up or prepared to handle what's required. I think what you're seeing is that consumer expectations are starting to change, right? A combination of these types of platforms being made available, the pandemic forcing us all to live in our homes and use our phones to access banking. If you look at the report that Forbes put out yesterday, you'll see that 78% of American consumers today prefer to bank digitally, right? And so that's creating an impetus for these community banks, credit unions, and now technology and fintech companies to ask the question of, how do I offer a best-in-class digital experience? I think on the Q2 side, the way we solve that for our bank and credit union partners is by taking all the pieces of back-end technology that they have that may be fragmented, as Vlad kind of mentioned, and providing a unified layer on top that we call the unified user experience that abstracts them from a bit of that complexity of migration, of back-end operational management. And that makes it easier for them to take a digital strategy and have a consistent experience. And then for banking as a service, it's actually a different view, right? How do you partner with a fintech or technology company who will invest heavily in building that experience and in customizing that to the user, and use them almost as a distribution channel for your business, right? So those 12 million users that are powered by those fintech companies are ultimately sitting at banks across our base, and those deposits are ultimately going out to local institutions, across the country. And so I think what you're seeing net is a change in consumer expectations, driving banks and credit unions to focus on going digital, dealing with the realities of how they're currently resourced, and looking to solutions like MBank and like Q2 as an alternative avenue for them to both solve the digital problem and find new distribution channels that target new consumers.
Got it. That's super helpful. And then Vlad, maybe moving just to MBank, the company has developed some partnerships with certain companies within the industry to help accelerate the distribution of its BaaS solution. Can you maybe dive into some of these partnerships and discuss what you're doing with these partners to distribute your solutions to financial institutions?
Sure. So I think the best way really to deliver BaaS or banking as a service, you have to have a partnership. You have to deliver it as a joint value proposition. So there are several groups or several buckets of partners that you must have in order to be successful in the market. So first, we start with networks like Visa and MasterCard. We're very deeply involved with Visa. We want to be more involved with MasterCard. Second, of course, you need to have sponsor banks, right? So we found that different sponsor banks have different appetites. For example, some of them would just say, hey, we have too much cash, so we want to go into lending programs. The others would say, hey, I don't have enough cash. I don't have enough deposits, so I would welcome deposit products and things like that. So you have to have multiplicity of licensed sponsors. Card processors. We have a deep relationship with Galileo, as you probably know from the market. So Galileo is a very well-established processor. We absolutely love working with them. And then, of course, there are many other technology vendors. One of them, Temenos, that we basically partner with to deliver credit union as a service value proposition. And I think that the key point here is that in order to make a partnership successful, you have to have full alignment as far as the mindset is concerned. Technology needs to work. It needs to be stable. Integrations need to exist. And of course, at the end of the day, the price point, the price point should work. It should be economical and it should make sense.
Got it. And then moving forward here, I mean, in our research on the digital banking and BaaS space, we've continued to see really a shift in consumer preference towards neobanks and fintechs. And I think both of you have touched on this a little bit, just given their digitally native platforms and consumer-friendly offerings, and have really taken off really in the last 18 to 24 months as a result of the pandemic. So maybe can both of you give your opinion on sort of when and how neobanks and other fintechs can meaningfully alter the landscape of banking? I mean, we're starting to see the trend, but in terms of these neobanks and fintechs really starting to really make a difference. Vlad, why don't you go first, and then we'll go to Ahon.
Sure. So universe of MBank clients is pretty wide. So on the one hand, or one end of the spectrum, we have fintechs who are mobile first, they're cloud native, they use best of breed innovators, they have an innovator mindset. Then on the other hand, we have credit unions. So we have 11 credit unions. They all rely on legacy systems. A lot of them have on-premise installations. They have very heavy infrastructure, very expensive. Let's put it this way. So of course, digital experience is important, and I can tell you that most of our fintech clients and some of the more advanced credit unions, of course, embrace digital technology and digital experience, being consumer friendly, just like what Ahon was saying. It's very important. One thing we have found, though, as well, the products need to make sense, right? So the lending products, at the end of the day, we want better interest rate on our credit card. We want a mortgage where we get approved, right? So I think from that perspective, I think there still needs to be some convergence, I guess, between the legacy world, especially credit unions, I would say, and also the fintechs. So a successful neobank and fintech needs to deliver value, and the value must be not just a digital experience, not just being more human, which they must be, it's table stakes, but they also have to deliver competitive and rightly priced products.
I think Vlad's totally right? You have to figure out, how are you going to compete in this market? How are you going to carve out your underlying niche, and how are you going to win that space? If you start by looking at how have consumer expectations changed, how has the world changed? 10 years ago, the percentage of consumers that actually had an alternative finance product was sub 10%, right? It wasn't really a concept that you would go and you would use these types of products. Today, you look at PwC's most recent study and you'll see 57% of millennials and 64% of Gen Z today have an alternative financial product. And that's as this space continues to grow. And you might ask yourself, why is that? Well, if you think about those demographics and you think about what they've been through, right, which is seeing the 2008 crisis and how that impacted the economy, the advent of these types of technologies, the growth of consumer-focused technology, what they expect from finance is not too dissimilar from what they expect from technology. right? Which is that it is unique, it is easy to use, it is built around them, it is competitively priced or free in a lot of cases. And that's changing expectations. You're seeing big banks drop overdraft fees, even though it's a large source of their income. You're seeing a lot more companies and banks start to focus on how do I create a differentiated experience. But at the end of the day, to the question of how can fintechs meaningfully alter the landscape of banking? First of all, I would say that they already have, right? 5-7 years ago, there were no fintechs offering banking. Today, there are more than I can count on two hands, right? But if I think about how they are doing that, I think it comes down to three things. The first one is focusing on solving a problem for a specific demographic. Vlad's talking about how are you going to compete with the people that are out there in the space? It's not like consumers don't have a single option for bank accounts, right? There are north of 4,000 banks in the United States. So when a consumer looks at a brand new offering, the first question they're going to ask is, why should I use this? Why should I switch, right? And if you don't have a discrete value proposition to that type of consumer, you're going to struggle because they have alternative options. And so the first piece is, how do you focus on the challenges of a low-income user or of a mass affluent user trying to manage their wealth, or of a gig economy worker who's not considered by different types of financial institutions, or of someone who's working with an insurance provider whose house just got flooded, right? How do you solve a specific problem for a specific person? The second thing is, Vlad just talked about this. How do you differentiate on experience and not just rate, right? Historically, the only thing that was really different between a lot of banking offerings were the color of the UI and the rate that you got offered, right? Today, those tools are made available to these companies and banks such that they can build new experiences, right? And that's changing the game and causing consumers to reconsider where they're going to bank. So if you look, for example, at Acorns, what Acorns is trying to do, starting with micro investing and now moving into banking, is how do I make banking and cash flow management as easy as I made investing? Right. And so by taking that philosophy, suddenly they're not competing on what is my interest rate or what color is the UI, right? They're competing on how easy have I made it to kind of do something that historically used to be pretty difficult. So the first one is solve a problem for a specific person. The second one is differentiate on more than just rate. And the third one is, and this is where banking as a service specifically becomes really interesting, how do you combine it with an existing ecosystem to create something that is new and difficult to replicate? As an example, if you look at the partnership that we had with Gusto, which is one of the leading payroll providers for small businesses across the United States, Gusto was able to use Helix to launch Gusto Wallet and combine it with Gusto Cash App, which now lets any employee that has Gusto Wallet get a free cash advance from their paycheck. Right? In a world where north of 60% of Americans, this is kind of a depressing stat, but post-COVID, north of 60% of Americans are living paycheck to paycheck. The difference between being able to get a free cash advance and having to go to a payday lender, on average, when you look at lower income users, is 8% of your income, right? So by using its position as a payroll provider and using that data and the ability that it's launched a bank account to offer a free cash advance, they're effectively putting like a 10% pay hike into the wallets of all of the consumers who are signing up for Gusto Wallet. Now, if you look at it from just an intrinsics perspective, it's a payroll company and it's a bank account. But if you look at it as the whole instead of the sum of its parts, suddenly you see a hook, the free cash advance, as something that's difficult to replicate, solves a meaningful problem for people who are struggling in the United States, and does so in a way that is differentiating, right? And so I think what you'll see as banking as a service continues to expand is you'll see this move into non-financial verticals, right? You'll see this go into gaming, into retail, into marketplaces, into the gig economy. And what you'll realize is that all of these businesses in some way, shape, or form rely on storing money and moving money. And those things oftentimes have friction that is caused by traditional financial solutions. And so I think the interesting thing over time in terms of meaningfully altering the landscape will be seeing how they take banking and embed it to create something different and not just add an account on the card.
Great. Yeah, that's super interesting. I just want to remind everyone in the audience, if you would like to ask a question, there is a question box at the bottom. And if you put it in there, we'll make sure to get to it at the end of the presentation. But sort of moving forward here, and I think, Ahon, you touched on this a little bit in your previous answer. A lot of digital banking revolves around appealing to younger generations, given they tend to be more tech savvy, more sort of digitally native and looking for, solutions that are geared towards that. And, maybe can you provide some color on, what Q2 is doing, with the BaaS product that Helix is doing to, generate solutions that are appealing to younger generations?
Most definitely. I think some of the things we just talked about, right? Which is that a lot of the younger generation were born at a time where they watched the crisis play out, or they just passed it, but they heard horror stories of what had happened, right? And so if you look at the Fed payment study, what you'll see is an increasing use of debit, and in some cases, a decreasing use of credit, as a lot more of the younger generation are trying to spend within their means. And if you go on to sort of the new media channels like TikTok and the like, you'll see influencer after influencer trying to educate people in these new social media channels as to how to spend within their means, how to build savings, how to start investing, which is actually really exciting, right? But when we put ourselves into the shoes of our customers and their customers, and we say, what are these consumers looking for? The two big things that come out are, one, they're looking for something different, right? They've seen traditional financial products. They know what to expect from those products, and they're not necessarily always just looking for a better rate. They're looking for someone to reimagine the experience now that the tools have been made available to them. And so that's one big piece about how companies like MBank and Q2 are powering this type of change, and why I think that's really exciting. But the second piece is something that is newer, and I think something that is right now unique to Helix and some of our customers, but you'll start to see proliferate across the industry. And I touched on it a little bit before. If you think about what's happened to the technology industry in the last 15 years, you've seen a laser focus on the consumer, right? How do I solve more and more of the consumer's problems? How do I better understand the consumer? And how do I use that as a means of differentiation, right? Google, Facebook, Apple, Netflix, TikTok, YouTube. When you think about the types of media and content or the types of tools that this generation consumes, every single piece of those technology companies uses the context they learn about the user to better target advertisements, to better target product hooks, to show you the shows that you actually want to watch. But as I mentioned, banking historically hasn't been that way, right? And so when consumers now come to brand new financial institutions or come to non-financial institutions, they want something that is as easy to use as the tech apps that are on their phone. They want something that takes something onerous and makes it fun, which may seem strange, but a lot of these companies are doing. But most importantly, they want something that actually understands them and doesn't give them things that are irrelevant. The reason that TikTok was so successful is that algorithm understands what you want to watch and shows you more of it, right? So why don't our banking products understand what we're trying to solve for and show us that and not everything else? I think what you'll start to see as companies like Helix power companies like the ones that I mentioned earlier is more and more personal banking services tailored to each individual person as opposed to one size fits all or even demographic-based solutions. And that'll start to change the face of consumer banking overall. So biggest things to serve that base, create something different, make it a joy to use and generate delight and personalize around the user.
That totally makes sense. And then maybe continuing on here, I mean, in recent years, a lot of companies have focused on providing like instant, easy solutions for sending and receiving payments, like P2P for both businesses and everyday consumers. Could both of you maybe sort of give a little color on the payment solutions that each of your companies have? And maybe we'll start with Vlad and then go to Ahon.
Sure. Well, you have to have payments to run a successful BaaS offering. Things like ACH, Fedwire, they're all table stakes, right? So you need to have those. In Europe, you need to have SEPA, for example. These are all table stakes. You have to have them. Now, where we focused quite a bit is one is to create deeper strategic partnerships with networks like Visa and MasterCard. So they have, we want to leverage some of their infrastructure and to make sure that we can move money seamlessly and eliminate the amount of fraud that we've recently seen with ACH, for example. That's on the one hand. On the other hand, we've been investing quite heavily in innovation ourselves. So we do have MBank Labs. I will talk about it later, perhaps. But there's one thing that we have created in a lab at first, and now we're rolling it out as well, is a blockchain-based global payments and settlement system. So we want to leverage the technology that's basically underlying technology behind Bitcoin, for example, separate the consensus mechanism and run this as a private blockchain to settle internationally.
That's super exciting. I want to learn more about that, Vlad, as we dig deeper into this. I think, first of all, Vlad's completely right that payment channels like ACH, like Wire, et cetera, they're critical to having a BaaS offering. And if you don't have them, you can't really get started, because at the end of the day, if you can't get money into the account is useless, right? So all of those, obviously, we've built out over the years. And I also completely agree that deep partnership with networks like Visa, we're also a close partner with Visa, are critical, right? Because they're the ones who operate the networks. And at the end of the day, you want ubiquity, right? You want to be able to use your technology anywhere, because the more you can use it, the more useful that it is, right? So in terms of things that are table stakes, I think those two are spot on. In terms of areas where fraud becomes relevant, I think what you're starting to see is a lot of these companies scale, and I think there was a New York Times piece about it just like 3 or 4 days ago, is that fraud is a big concern, right? Because handling fraud responsibly is the difference between a profitable program and an unprofitable program, right? And so one of the big things that we invest in is, how do we enable not just access to fraud tooling, but also a deeper granularity in fraud management, so that I can treat my good customers and my bad customers differently based off of the context that I have about them, instead of just applying broad-based rules that might actually hurt some of the people that I want to bring money into. And so over the last 12 months, we've built out, one, access to some of Visa's fraud tooling, which until now was not made available to fintechs, right? So today, one of our fintechs can access the tools that were traditionally made for banks through our admin console without having to become PCI compliant or SOC 2 compliant, which is a big thing for them. 2, we're giving these fintechs personalizable controls, right? So I can take a brand new user who I know nothing about and give them the lowest limits and learn about them over time to mitigate my risk. But I can take a user, if I'm a payroll company that I've been paying for 4 years, that may be a new user to a bank, but that I know well, and give them higher limits and all that kind of stuff, because I know what their payroll is and I trust them, right? So giving them that granularity lets them better control their risk. And what you'll start to see in the next 6 to 9 months from us is fraud analytics, right? And fraud understanding. How do you take that data, understand something ahead of what the bad actors are understanding, and proactively prohibit it from happening, right? So that's the fraud piece. And then finally, in terms of payments innovation, super interested to learn more about what Vlad and team are doing on the blockchain side, because I think blockchain and cryptocurrency more broadly are exploring a whole litany of use cases and are finding their niches insofar as how to solve different problems for different use cases. But I also think you're seeing real-time payment channels like RTP and FedNow, the latter of which will be part of the pilot, that are changing the way that money is moved, right? We're all used to ACH where it's T+2. Well, in RTP, it's not, right? And that fundamentally changes how money moves across the economy. And so I think as FedNow and RTP become more and more ubiquitous, you'll see a changing payments environment, right? And you'll see a changing landscape within banking as a service, because it'll alter the way that these systems commingle.
Got it. And then Vlad, you hinted at it in your answer, but an interesting arm of the company is the MBank Labs. And can you maybe just give a little bit more detail on the segment and how it operates and what you hope to achieve through it?
Sure. So MBank Labs was created about 4 years ago. So we created it at first to build and cultivate different use cases to use MBank technology. However, we soon realized that it cannot just be limited to MBank technology, right? So we have to attract best of breed innovators. We have to appear as a thought leader in the industry, not just in the United States, but internationally. And so where we stand now, we already are on our 4th cohort. We ourselves as MBank, we have made investments. So we invested in 14 companies. And some of them are very promising, and we're deeply committed for them to succeed. In addition to that, some of the innovation that comes out of our MBank Labs appears to be very relevant for what we are doing. It appears to be very relevant for credit union space. It appears to be relevant for payments. So we basically select whatever makes sense for us and invest even more money in this. So right now we're working on patents, and there's one question that I think that I saw. If you don't mind, I'll answer that as well. So we are working on patents. Our biggest work, I guess, is focused on what we call a multi-asset account. It's basically an account where you can transact in different asset classes, be it fiat currency, be it stocks and shares, be it cryptocurrencies, and so on. Our second patent is what we call a single source of truth core. And that's basically, this is to eliminate the need for reconciliation. So all of those things that we're doing, plus the blockchain-based global payment and settlement system, all of those things, especially the ideas, they came out from MBank Labs.
Great, super helpful. And then Ahon, looking at Q2's existing market share of FIs, it seems the company's taking the approach of allowing innovation to enter your customer relationships through the Q2 Innovation Studio offering. Can you maybe explain the structure of the studio and the benefits that it provides to your customers?
100%. If you recall what Vlad said at the very beginning of this chat, almost all of these partner banks want to partner with fintechs. They want to explore this avenue, but they weren't necessarily built to have a huge product team, to have a huge development team, to have a huge partnerships team. And historically, before the Innovation Studio, for a bank to embed fintech services inside its offering would take 9 to 12 months, would take millions of dollars. And that slowed the pace of innovation inside of a lot of these institutions. With Innovation Studio, we've kind of created an SDK and an app store of banking, if you will, that allow banks and credit unions to embed fintech functionality, almost like picking it from an app store. And what's interesting about that is by developing to our SDK and becoming available on our marketplace, these fintechs are getting a new distribution channel into all of these banks and credit unions. And by embedding the fintech functionality, these banks and credit unions are solving more of their consumer and small businesses challenges and retaining that relationship, right? And so it's one of those areas where it's kind of a symbiotic relationship. One side is getting the distribution it needs, the other side is getting the functionality it needs. And what used to be a 9 to 12 month cycle is now weeks, right? And that has a huge, huge impact. And so we've seen the number of fintechs that are on our system dramatically increase. We've seen our banks kind of talk about Innovation Studio as a way to be ahead of the market and to add this functionality without having to have a massive developer shop and do so inside of that unified experience that we were talking about. And it allows us as Helix to take some of the learnings, almost like Vlad was saying with Labs, take some of the learnings that we're getting in building these products alongside some of the most innovative fintechs and bring that back to traditional financial institutions. Because at the end of the day, the goal is how do you get better products for people, right? Whether that be through the community banks and credit unions, whether that be through the fintechs, or whether that be by bringing them together, how do we get an overall product set that solves more problems, is more economical for all parties involved, and like we said, is a little bit more human.
Great. And I guess, we got time here. We got a couple of minutes left. We got time for one more question here. Maybe just to get both of your thoughts and your opinions on a higher level on the competitive state of the industry, looking at the competitive dynamics within the BaaS space and how you sort of see it shaking out over the next 2 to 3 years. So Vlad, why don't you start and then we'll go to Ahon.
Sure. I mean, I would call it more co-opetition. Let's put it this way. So there's a lot of cooperation happening as well as competition. So I wouldn't necessarily say that the competition is getting worse. It's quite the opposite. I think that there are a lot more use cases that are opening up. I think what Ahon and Helix by Q2 are doing is absolutely amazing. Big fan. I do see that the market is going to continue consolidating, and I think that there will be probably fewer BaaS players going forward. I think big companies like Fiserv, FIS, and other big tech companies will probably drive consolidation. So I think both to protect their business, but also to appear more innovative. And I think that some of them really need that push. I think 2022 is off to a good start, but 12 months from now, I think that the market should normalize and there will be a smaller number of BaaS players, but much stronger ones.
Definitely agreed that rising tide raises all ships. At the end of the day, I think we're all trying to catalyze a change to how banking products have been built, to how consumers get financial offerings, and every sort of provider that comes out in the space is pushing that farther just a little bit. And so we welcome, I think, new providers in the space. To Vlad's point, we've had a surge of new platforms pop out in the last 3 years, almost to the point where a lot of prospects who approach us are like, I don't know the difference between these. I don't understand how to make this decision. And so I think the first thing that you're going to see is specialization. You'll see BaaS platforms that are built for small companies. You'll see BaaS platforms that are like ours built for differentiation at scale. You'll see BaaS platforms that are built for specific payments use cases, et cetera. And so I think you'll see that stratification. Second, I totally agree with Vlad. I think you'll see consolidation. You're already starting to see some consolidation as larger parties decide to buy these smaller, maybe more innovative companies as ways to diversify their strategy, but also consolidate their overall customer base. And I think you'll also see a deeper understanding of the technology underneath, right? One of the things that folks don't understand is they are all called banking as a service, but there are very different ways of delivering banking as a service, right? So for example, Helix operates a cloud native core that is effectively a unified source of truth between the fintech and the bank. So we have one core, they both write to the same system. That is the API. We have one admin. And to Vlad's point, that prohibits painful reconciliation with a legacy core that allows you to innovate, et cetera. And that's one model, right? There are other banking as a service providers that are doing effectively middleware to those traditional providers and trying to make it cheaper to launch these types of services so small companies can launch them. There are others still that are doing prepaid processing, right? And effectively helping folks launch cards really quickly so that they can solve for those discrete payment use cases. And so I think what you'll see is a deeper understanding and a clarification of what is the tech stack behind the name and why does that matter and what does that do?
Got it. Makes sense. Well, we're out of time here. Vlad, Ahon, thank you for joining us today to discuss the topic. It was a very interesting chat. For everyone who's looking for the next presentation at 3 o'clock, we have our real-time payments panel, which should be starting in a few minutes. So once again, Vlad, Ahon, thank you for joining us, and everyone have a great day.